Good afternoon, everybody, and welcome to the next in our Lunch and Learn series as part of the Spark by Bruntwood Works programme. For those of you who I've not met before, my name's Ilona Alcock and I'm co-founder and director of Elevate. We're a business development consultancy born out of the pandemic, so still very new. We launched in September. We have enjoyed an incredible amount of growth over that time, which has been wonderful and is due in no small part to the support of the organisations around us, including people like Bruntwood Works. For those of you who are unfamiliar with the Spark programme, and this is the first time you've come across the content, the Spark programme was something that Bruntwood Works felt was really valuable to their customers. It was a programme that they were planning on putting together anyway and was then accelerated due to the pandemic. Whilst they couldn't welcome customers into their workspaces, they were really keen to maintain that sense of community, give their customers a platform to be able to share knowledge and expertise and to support each other through. Now, obviously, this week we do now have something resembling a roadmap to freedom, which is a wonderful place to be after what feels like forever. And I know that Bruntwood Works are really keen to continue this programme as we start building up to reopen and looking ahead to what's hopefully a much more positive year than 2020. That being said, 2020 was not all bad for every business. Depending on the sector and depending what people were doing, different sectors actually saw huge amounts of growth. One of the other programmes that we work on with Bruntwood Works is called the Peer Networks programme, and that is funded by Bays and the Business Growth Hub. It brings together leaders of SMEs to talk about the challenges that they're facing and gives them a framework to be able to support each other. And whilst a lot of those challenges were what you would expect and some of the things that we've covered in other Lunch and Learn seminars, there was also this issue of, well, how do we manage this growth? Should we continue to grow organically, or is now the time to start looking for investment? And what we thought would be brilliant to do was to bring in the absolute expert to talk on that topic. So I'm absolutely delighted today that we are joined by Jess Jackson of GC Angels, a familiar face to many of you in Greater Manchester, I'm sure. For those of you further afield, you may not be aware of GC Angels and the work that Jess does. So I'm going to pass over to Jess now to do us her own introduction.
Well, thanks very much, Ilona, and absolute expert. Gosh, that is a lofty title to to live up to there. But yes, good afternoon, everyone. I nearly said good morning then. I'm Jess Jackson, and I'm head of investment at GC Angels, which, as Ilona said, or actually didn't say, we're the most active early stage investor in Greater Manchester. So we're really, really proud of that. And we've worked really, really hard. But it's kind of all down to really the fantastic and innovative and ambitious early stage business community, really, that success has been born out of. So really happy to sort of share with you some of the things that we've been working on and working with our businesses on, covering some of the basics of raising, how you can get investment ready, give you a quick snippy overview of the landscape, sprinkle some hints and tips in there. I've kept it kind of surface level so that we can cover all of those areas. As I'm sure you can appreciate, there's a lot of detail behind each and every subject there. But we will leave some space for some Q&A. So please don't be shy and make a note of any questions that you've got for me at any point during the presentation.
That's wonderful. Thank you. Before we get started into that, what is going to be as high level as it is, it's still quite a practical session with a lot of information in there. Are there any kind of high level trends that you're seeing over the last year or so in terms of the appetite for investment, any kind of changes that have come about?
Yeah, and I mean, I will share some of them with you as well, but I think, it's been a year. We are fast approaching the 12-month marker for when things really kicked in terms of the impacts of lockdown. What we saw in kind of late February, early March, really, as things were locking down, we saw our business community really just hold off from making any approaches because their minds were pretty much everywhere else apart from their businesses, for very good reason. But that recovered very, very quickly. That said, some of the kind of investment appetite and that risk willingness to take on risk really kind of went away. So it was really difficult to manage, but we still managed to be incredibly active last year. So I'm really happy to kind of share what we've learned through that process. We're hoping it's going to recover, particularly at the early stage, and hopefully some of the things that come out in Rishi Sunak's budget, particularly around levelling up, prosperity, rather than austerity, please, thank you. And, you know, any other things around capital gains tax, EIS, SEIS, and anything else indeed that might help the business community, we're going to be keeping a very keen eye out for.
Amazing, thank you. And it doesn't feel like 10 minutes since the last budget, but that's probably because we've had about 4 in the last year rather than 1. And I think absolutely right there, that there is this appetite to get back to business, to start doing all of that stuff again. But it would be foolish to think that we can't do that without a little bit more support and guidance. So what I'll do now then is ask you to start screen sharing your slides and take us through the presentation. Just a reminder to everyone who's watching, if you do have questions at any time, please just bob them in the chat and we'll pick those up at the end of the presentation. We will also be sharing Jess's contact details. So if there's anything you want to pick up after the session, you can do, and Jess will point you in the right direction for those as well.
Brilliant. Thanks, Alona. So hopefully you should be able to see this. There's my Twitter and our organisation Twitter. If you kind of want to drop us any messages or whatever and let us know how you found the session. I'm really keen to hear from you and how useful it might have been and any other areas that we can develop this. We often do some tailoring for our audiences as well, where possible. So I've already kind of covered who we are. We're part of the growth company, as I'm sure you're probably all aware. We're early stage investors. We focus on Greater Manchester. We can invest ourselves in Greater Manchester. And we've built an incredibly active and engaged network of investors and funds, and we co-invest alongside them. And we're really geared towards kind of boosting innovation in the region, creating those all very exciting scale-up businesses that will ultimately become the scale-up companies of the future. You know, creating those unicorns and creating jobs in the region. So as I sort of said, we are the most active early stage investor in the region. So this is an extract from a Bowhurst report. So we're referred to as an angel network, but we are a lot more than that because, as I said, we put our own capital into deals, which angel networks typically don't do. And you can sort of see who perhaps some of the other players are, and we can maybe touch on some of those later and where they really fit in with that ecosystem. Some of you might already be wondering, well, what does early stage even mean? Well, we can sort of come and cover that through the course of this presentation. So again, some of the things I wanted to cover in this, and in no particular order there, is kind of a bit of an overview of the ecosystem here, what investment is and how you can tap into it, a bit of the funding landscape, and we'll touch on diversity and investment as well, because it's a bit of a passion project of mine. So we'll start off with Manchester and the ecosystem here. So these are just some statistics that I think are really useful to consider. High growth businesses generate a huge amount of turnover and economic impact in the region. 3% of all UK tech investments have come to Greater Manchester, which doesn't really feel like a lot, but I suppose it is, and it could be better. We'd like to see that increase, and we're certainly, I think one of the most active, if not, I think it's the second in Europe for the early stage tech scene. And only 16% of those companies are actually female founded in Manchester compared to the UK-wide average, which is quite interesting. I think we've got some really great emerging, already established and emerging success stories here. So I really feel like we could become, oh gosh, to use a Borisism, world beating there, but let's keep going. And compared to the overall UK tech ecosystem, we've actually got a higher exit rate. So that's really good. But how does that kind of match up with with seed investment levels, and there is kind of a misalignment there. And yeah, our strongest tech sectors are SaaS and mobile, but we've obviously got a burgeoning fintech scene here, lots of great kind of AI and machine learning and blockchain, well, businesses utilizing those technologies. And to kind of put those into context, I mean, I don't want to dwell on this too much, but it is really important to get some context of the impact of COVID in a little bit more detail, because it is impacting businesses that are going out and looking to raise. So the value of investments just doesn't align with what we were seeing in 2019. So we saw the biggest year-on-year drop on record, so a huge fall off a cliff. That said, angel investors were the only type to increase activity. Now, at face value, that would suggest that they're doing more investments, and it's not actually the case. They were putting their hand in their pocket, yes, but it was to support their portfolio and make sure those businesses continued to trade through, rather than sort of sourcing out new deals. So obviously, as I've just said, startups and scale-ups that were already on that journey, they didn't really need any additional support. And there were a lot of products through the government that were geared towards them. So Bounce Back and C-Bills, and particularly Future Fund. So Future Fund was aimed at businesses that had already raised £250,000 previously in a private investment round. And that limit really impacted those early stage companies because they just weren't at that level. And it also adversely affected founders from diverse backgrounds of any kind of variety, where they would struggle to access finance anyway. So we were kind of very much challenging some of the parameters within that fund in the early days. And we were joined by, you know, the likes of UKBAA, UK Business Angel Association, who do a lot of work across this stage. So I think the thing that I alluded to earlier was that we really, really need a busy seed stage. So this is often businesses' first or second rounds of funding, typically angel-led, though not always, because otherwise later on down the line, we don't get that really healthy mid-market. We don't get, you know, those exits ultimately. So while Manchester does a lot better on potential on exits, I think we could be even better than that, because we have such a bustling seed stage here, and there is a great need for more mechanisms to solve that. And we're expecting that some of the issues that we've seen, i.e. first time raises, accessing funding, to persist. We can't see that being immediately recovered, but we're hopeful that, as I mentioned in my intro, some of the public mechanisms might filter their way through the Northern Powerhouse kind of devolved budgets and so on, because, you know, the regions have identified this as being critical to their growth and recovery. So probably like a little bit of an obvious question here, just kind of stepping back from COVID impact and Manchester's technology scene, and answering the question, or trying to answer the question, why you should seek investment in the first place. So, I mean, well, go back to that. So obviously it's to grow your business. Now, you might be lucky, you might be in a position where you are starting to trade and you're starting to see income generated by your business trickling through. You're starting to see the gradual uptick of growth as you're figuring what works for you and your marketing. But it might not be as fast a growth as you would like, or it might be that you kind of need a cash injection to fund developing your product, or to hire the people that you need to deliver your service or to develop your product. Some businesses, you know, probably wouldn't be able to get off the ground without that initial seed capital. So I will talk about now some forms of funding that are available. So one of them is grants. So we see this as really, really important in the sort of pre-seed seed stage, particularly in innovative businesses that are developing technologies. They tend to be focused on innovation. They can cover your resource. They can be national, or indeed they could be quite local, because we've seen some local authority grants for things like office space and rates relief and so on, coming from your local council. So, you know, if you're thinking you want to see what grants are available, there are some very good websites that sort of collate different grant products that you can access. But also there may be things that are available via your kind of local government authority. So go and have a look around there and see what there is. You know, they are quite painful to access sometimes. There's a bit complicated application processes, and there are businesses that support with that and take a share of the success fee. One off the top of my head being Granttree. They are seen in the market as sort of like free money, and obviously there's no such thing. You have to put effort in to get it, but ultimately there's some monitoring that goes on, particularly with UK RI. But angels actually do like it as a way of sharing risk in a round. So you need to develop your product anyway. There's a grant available to fund that, and it might say we need you to get 30% of this from private. We've seen that fall away now, but they also like to co-invest alongside it and share the risk of the round rather than put in more and potentially not see an outcome. They're really, really good for pilots to do some market validation. And as I said, they can be regional, national, and they can also be sector focused. So definitely encourage you to have a look at what sorts of things are available. Just be prepared that it's going to take a little bit of time. They're not sort of instantly accessible, unfortunately. Now, another one that's obviously really obvious, which you'll probably all be aware of, is debt funding. So the sort of COVID response products are bounce back loans and CBILS. You can access things like invoice financing if you need to fund purchasing product in order to sell it, and you've kind of got some financial trading history there that someone can look at and say, yeah, we know they're going to get that out the door. You can access things like that. There are specific loan funds that are managed by VCs. So GMCA, Northern Powerhouse have got some debt funds. There's obviously ourselves, Business Finance. We manage a number of products such as startup loans, which are about 5 to 50k, there or thereabouts. We've got Regional Growth Fund and so on. But I think it's safe to say that while bounce back loans and CBILS have been in the market, those other kind of products have not really had a look in. There are lots of alternative finance lenders out there, either managing public pots or private pots. These can be difficult to access for startups, however, because you generally need to have made money to access it, which does feel like a little bit of an oxymoron. But think of it as these are typically bank-led commercial products. They are riskier for the business as well. You've got to be mindful of the interest rates and when you need to pay those back. And it can be quite confusing, actually, because there's lenders versus products. So, you know, we're a lender, GC Business Finance, and it lends Regional Growth Fund, for example, on the export. So it can be quite confusing, but just make sure that you ask a lot of questions and do some research before thinking about applying, or indeed applying for something in this area. But the area that obviously we're here to talk about today is equity. So it's a very complex market. There are lots and lots of players, and on the right hand side there is only a few that operate within Greater Manchester. You've got, you know, angel investors who operate as individuals, or they operate in a syndicate, which is essentially a group. That can be very informal, or it can be actually very formal, where they have sort of commitments that they will get out at X amount of money in a given year, for example. There's also introducers and networks out there. And, you know, we could talk for a while about being very careful in this area, because it's just unfortunate that there are people out there who it's almost, it can be a little bit predatory, particularly on the introducer side, where they know startups want access to funding, they don't know who to talk to, and you know, they sign you up to maybe pay them up front, which I would advise never doing, or they will say, we want to take a slice of what we introduce you to. And you know, that's a legitimate way that this market sometimes works, but it can be difficult to sort of see who's good and who's not. And we've certainly seen the good, the bad, and the very ugly when it comes to introducers and advisors. And you've also got obviously your venture capital and your private equity. So we've got early stage funding, so proof of concept, seed or pre-seed kind of stuff available through the MPIF product, which is managed by Mercia and Maven, that very complicated product versus lender thing I alluded to before. There's us, who act as both a fund and a network. We've got GMCA, who also manage millions across the region, and Praetura. And then we've got a lot of bigger players out in the private equity space who will only really get out of bed or look at you if you're looking for 5 million. But you've got obviously the turnover and the growth to support that request. A lot of them, with the exception of the likes of Palatine, for example, have tended to start themselves up in London and then open a regional office. And Palatine started in the north, and yeah, you're really, really helpful in the funding community, and will often kind of track businesses that fit their criteria from a very early stage. So it's quite spooky to think there are PE houses out there who will already know about you before you get there, but that's kind of almost a good sign of a private equity house in a way, because they know the kinds of deals that they want to support, and they will keep an eye on them to see if the growth is headed in the right direction before they will start to build a relationship and hopefully ultimately move to invest in that business. So I wanted to cover a little bit about what an angel investor is and the difference from a venture capital firm. It might seem incredibly obvious, but I think it's always really good to cover basics. So this I've got a couple of examples of this kind of graph because it manifests in different ways, but it kind of illustrates with the blue kind of dotted line is your kind of profit, I guess, or your income. You're spending a lot when you're pre-seed seed and not really earning anything, which is normal. And then obviously when you move for startup growth in Series A, it's not going to be linear, but just go with the example here. And we've kind of got the different funding mechanisms that tend to go on at those stages. So we've talked about grant funding, and that can sort of be any stage of business really if they're looking at doing innovation products, but generally speaking these tend to be accessed the most by the very early stage businesses. Friends and family and angel investment tend to really just be one and the same mechanism. You're still putting cash in for equity, you're still probably going to benefit from SCIS and EIS tax relief schemes. The key difference being your friends and family obviously are literally your friends and your family, and typically won't give you the volumes of funding that you would need. They tend to be much smaller kind of check sizes and investment. And angel investments are sort of professional high net worth individuals or sophisticated investors, and they are two definitions dictated by their available wealth, who will create an investment portfolio, so 10 plus different investments to sort of manage risk across it, basically. It is also important to note that friends and family funding, a lot of people in VC will sort of ask whether the founders have put their own cash in. I don't like that question being asked because I think it relies on a lot of factors, i.e. you've just got latent access to wealth, which is just not available to some communities. And I don't think it should dictate whether or not your opportunity is viewed in a positive light or not. Crowdfunding, again, I haven't touched on this in a separate slide because they tend to be sort of equity products anyway. Depending on kind of your business area, this could be a really good way of you to A, market yourselves, B, obviously get the finance and maybe do a bit of a PR push around it, and also get some early adopter customers on board and kind of fill your pipeline, for example. So there are some businesses that this works really well for, others not so much, and it's quite a risky endeavor in and of itself, just the amount of time that you need to put in. We've touched on debt finance. when you start to see those revenues come in, the debt lenders can sort of start to see where that repayment profile is going to come from. You've got your venture capital and you've got your private equity further on down that line when you've got a lot more recurring revenue coming in. Another way of looking at it again is, profit over time and who tends to get involved and how that tends to be funded. It's similar thing, but a different way of viewing it. And just a third one here really that shows it's a bit more of a wiggly journey. It's not just like, 1-2 funding rounds and then you're off. It's a lot more complex, and there are, IPO is there, but in reality, it can be acquisition or a merger. So I will touch a little bit on your investment deck, although I can deliver a completely separate workshop on this in and of itself. And there is kind of no right answer. There's just some general good rules of thumbs and perceived wisdoms that generally run in a common thread. And people have their preferences for order, but there is some good rules of thumb, as I said. So, why would you even have an investment deck? Well, if you want to go out for investment and growth, you're going to need one to kind of get those conversations going. It's all well and good sort of dropping someone a LinkedIn and say, hey, let's get a coffee in or a virtual meeting, but they're going to want to see the meat of what you're asking them to look at. It can also be quite useful, not necessarily an investment deck, but kind of the same sort of thought process of selling your business for those sales opportunities, for recruitment of talent, and for programs. So I normally use this slide. It was in a corporate venture incubator type competition, actually. And those businesses have developed a pitch to win a place on that as an opportunity. So there's lots of different uses that having a really good deck that says who you are and why you exist and why you're the best can be quite helpful. So what is a deck? So it literally sort of sets out your business, your plan, problem solution, market fit, how much you want, details the team, and what you're going to use the funding for. Those are kind of the core elements. General rules of thumb that I would impart on you before you kind of give a pitch in person is just make sure that your slides are not too content heavy. You're not asking somebody to read an essay. Keep it light and make sure your delivery is animated and energetic and that you're taking people on that narrative journey with you. Make sure that you get as much feedback as possible on delivery as well as content, but do that ideally before you even get into a room, whether that's a digital forum or ultimately when we do get back to normal, a physical pitch space. I used to run events called later pitches where we would get together in an evening and give people the floor to deliver their pitch for the first time potentially and get that feedback. And it's so crucial that you don't do that first time delivery and potentially fall on your face in front of investors, because they do have long memories, annoyingly. There are examples where I will reach out to an investor and say, we're working with this business and they're raising some funding, and they will say, oh yeah, I saw them pitch 18 months ago, I didn't like it, and they're not bothered. And it's kind of like, in the startup world, we all know 18 months is literally a lifetime, but unfortunately, those impressions do get embedded. So it's really crucial to remember that. So I'd say find forums that you can practice that vary from your immediate peer network. They're a good place to start, of course. But after a while, and we all know we get fatigue looking at the same documents all the time, you're not going to get the variety of feedback that you need. So speak to people who've never even heard of you. Can you explain it to your nan? That kind of good rule of thumb, to make sure that it's understandable by everyone, but that you're just taking in as many different perspectives as possible. And the most important thing that I tell founders is you're the chief asset of the business. And if you can relate to people and people feel they can relate to you, you're approachable, they can talk to you, you're relaxed, you're confident in yourself and your business, then people will do invest in people. And that's going to be, you're the chief asset of the business. But, a lot of people ask me, when I talk to them, that they've got their deck, it's kind of like, great, yeah, I've done that, Jess, okay, but what do I do with it now? So I will sort of talk to you about how people typically tend to approach investors, and some of the frustrations that they feel as well when we sort of get through to some of the diversity stuff. So finding angels is generally where people will be at, I would guess, on this call. You can approach them directly through, mechanisms of LinkedIn and so on. And sometimes that might work, although it can be quite difficult to get that throughput. Pitch events and pitch dinners often have a cost associated with them. So I know there are some angel groups out there who have a cost model, which they say is for investment readiness, but it's actually just for the dinner. Let's be honest about it. But that can be a genuine way of getting in front of investors. But there is, there's always a risk that you're not going to get any interest, and you've laid out some costs to be in that room. There are also kind of platforms online, whether they be through a network such as ourselves. We have an online platform that all of our investors have access to. There are others that you can sort of apply to be on, like On Deck, and probably lots of others as well, that I'm not even aware of. And as I said, you can go through the introducers, so the networks themselves. So there are quite a lot across the region: Dow, Schofield, Watts, North Invest, so on and so on. There are co-investment funds such as ourselves who, when we like something, we know that we need to get the rest of the money, so we work hard to try and fill those rounds in. And as I alluded to early on, there's kind of the money men, because they do tend to be men, who sort of have probably had careers in corporate finance, and act as connectors in the background, may take sort of non-exec director roles. And all I would suggest is, if you're ever sort of not sure, try and get a reference from someone else that you do trust, who may or may not have a connection in common. LinkedIn's really helpful for that. Say, this person says they'll work with me to help me, but do they even know their stuff? Are they credible? And I'm sure that people will be more than willing to be honest with you about whether that person is good at what they do, or actually they're just going to be a waste of your time and get your hopes up. Generally as well, what I would suggest is, don't ever feel like, and if anyone ever tells you you can only work with us on an exclusivity basis, I don't believe that at all. Founders come to us for help, absolutely, but we would never stop them from having conversations with other introducers and other funds. Just be aware of kind of potential fee stacking, and encourage those partners to work together and come up with a fee share, contingent on success, of course, so that you don't kind of get hit with, these multiple introduction bills that end up stacking on top of each other, because everyone should want to work to the ultimate goal, which is that you raise the equity you need, and you're not paying half of it out at the other end in fees. I did want to just highlight that the UK Business Angel Association's got some really great resources as well for early stage funding. So here are just some of the Q&As or areas that you can go in and have a read on different things. Some good rules of thumb there, and I would definitely recommend you go and have a look there if you're wanting to read or dive into any more detail on some of the areas that we've covered. VCs and funds, so that is a picture of Fort Knox. So it can be very difficult to get into a VC and a fund, and I think sometimes, especially also sort of corporate venture arms, who I would sort of place in the similar space, are purposefully difficult to find. I think they want to keep their deal flow low and tailored, and tend to prefer to work with preferred introducers, and that comes with a whole host of issues on diversity, really. So if you've been given a warm lead into a business, you're 13 times more likely to get to the decision makers. So when you sort of look at the Rose Review, that and I think that that's a BBB report on the right, but the Rose Review looked at similar things, and sort of women's networks tend to be underdeveloped, or just very different to men's networks, and we're also less likely to sort of directly go, give me an intro in there, would you please? and you don't get type thing, but also, do we even know the right people at all? Sometimes we don't, unfortunately. The data that shows that 75% of pitch decks which got to the VC are from founding teams with no women in it, and that unfortunately is compounded by these kind of old boy kind of networks where it's, I'll work with my preferred introducers, thanks, but they tend to be the same cohorts of people. So we're trying to change that. We're always happy to give warm introductions to other funds for founders that we work with. Yeah, unfortunately, that can just be the sad state of it. So again, utilize your network, utilize LinkedIn to see if you've got someone in common who's connected with one of the decision makers or the investment directors in a VC if you want to approach them. And as I say, we know that's more likely to get you a face-to-face conversation or a follow-up, which will allow you the opportunity to present your business in person. So this is another slide that just kind of shows you that map through. So those warm introductions might actually only make up 40% of the pitch decks, but it's actually 82% which end up receiving funding. So it's very startling to look at it that way. So you almost have a penalty if you're coming in cold. And just to reiterate the point that I made before, VCs do focus on founders, especially in early stage businesses, because there's not a lot of data to look at. There's not a lot of performance. This is the biggest, therefore, risk that unconscious bias decision making can come into play. So all I would say is, keep going, be very aware that you're going to have to talk to a lot of people to access the funding. But go in as prepared as you can, get those warm leads in, and really highlight your strengths to give yourself the best chance of coming through the other side with some cash. So I think we'll leave it there for the overview. I've waffled at you for quite a while, I'm really happy to sort of take your questions. My details are there if you want to get in touch.
That's wonderful. Thank you, Jess. And absolutely, definitely not waffle. There was so much in there that was just really useful, I think, in terms of the practical steps that we all need to go through, but also in terms of the gender inequality, but also, some of the other stuff that we haven't touched on so much around kind of other types of diversity, which is just because the data isn't even there to say this is how bad it is. So it's just kind of scratching the surface there of kind of some of the additional challenges that people face. And I know, as you mentioned at the beginning, it's very much something of a passion project for you to highlight those inequalities, because sadly it is going to be those female founders, and obviously talks to me very directly as a female founder, to think, well, actually, if I decided to go down that investment journey, I'm automatically at that disadvantage because I will be viewed as being kind of atypical or riskier. So it's great to see that side of things included as well. So we've got the chat open. I know that when we start talking about investments and grant funding, it can all be kind of very specific to your business. So there may not be things that you're wanting to pop into the chat in front of other people, and that's absolutely fine. So we have shared Jess's details on the screen. So do feel free to contact her directly with anything. But if there are any questions that you'd like us to cover, then do feel free to drop it in. One of the things that I'd be really interested to know is, whilst hopefully we are going to start getting back to some of these kind of, these live events, and, obviously, pros and cons in terms of pitch dinners, obviously, there's brilliant events that you run where people kind of get to pitch to each other. Are there online versions of those available in the meantime, or have we kind of seen that activity put on hold across the industry?
Yeah, no, the answer is absolutely not in a lot of cases. So VCs don't tend to do kind of pitching events anyway. They often deal direct, they get those applications through, but certainly at that kind of angel stage, the pivot to sort of using tools like Zoom or whatever it is that people use has actually increased their ability to reach their investors. So obviously we know Zoom fatigue is real, but you know, those that are looking for new opportunities will tune into online pitches. So I mean, just to give you a context, really, we used to do an event a month, give or take, and we'd often get maybe, I don't know, we'd probably sell 60, I say sell, we'd have 60 tickets, but then on the day you might get kind of 30 odd attendees, 25, 20 of whom were actual high net worth investors or funds. What we're seeing now is our pitch events will get 100 registrations, 70 attendees, and maybe like 50, 60 of them are funds and high net worths. Those additionals tend to be kind of advisors or mentors potentially, or the professional services community. So we've really seen an increase in people who are engaging with these things. We can also deliver them in an hour instead of, you know, an entire afternoon of corralling humans into a room, you know, getting everything set up, and then you know, the networking either side. That said, I really do mourn the loss of the networking. You do really miss out on those organic opportunities to bring people together and facilitate those discussions immediately after, while they, you know, striking while the iron's hot. You know, we also invested in our deal platform, which was already in train, but it went live in May. And we've onboarded nearly 200 investors and funds onto it since. So, you know, it's really increased the opportunities to reach people. Also kind of funds that have got a regional activity, but they're actually based in, say, London, for example. They don't have any boots on the ground in Manchester, but they know that it's excellent for deal flow and tech businesses. So they've sort of come to us and been like, we want to find deals, and they sit on our events, scour through all of the businesses on our platform, and you know, it really is being used as a sourcing tool, that actually they don't have to be sat in front of founders and going nope. They can sort of go out and hunt down the businesses that they want to look for, that they think meets their criteria. So really has changed things. We're able to deliver more, reach a wider audience, and I would foresee that actually when we do go back to normal, we'll still probably maintain some of that, and have a less frequent but larger kind of networking touch point kind of event, where we are more relaxed and engaging with our investors, and we'll invite some of our businesses, but purely for the networking.
That's brilliant. And I think what I really love with that is that we could have just seen this as either we're just going to put stuff on hold, or we'll swap to something, but it's not going to be as good and we're just waiting to go back. That you've just highlighted there, like so many things that are, you know, the silver lining of being forced into doing something differently is, you know, that wider audience. And if we see the money that was invested in Manchester businesses over the last week or so, it felt like, you know, every few hours it was another multi-million-pound investment coming through. You know, eyes are on Manchester and people are looking to see what we're doing here. And I know some of the people watching this might be from the other regions, and that will be the case as well, that you might not have those London investors, you know, popping up and down on the train and coming to all of these events and doing it. But if they've got an online version that they can just whiz through and kind of cherry pick from that, that is actually going to drive a lot of that money up north as well. And I'm obviously a huge advocate for face-to-face networking. I absolutely love it. You know, there's so much that we can do online. So it's really interesting to see that actually when we do start going back to those live events, that we've managed to drill down what's the bit of it that's really important to do in person, and which are the bits that we can kind of take out of that and do somewhere else. So I think that will give us just such an interesting mix to come back to.
Yeah.
Are there any kind of particular individual businesses or sectors that you think these are going to be kind of, you know, exciting things to watch as, you know, over the next kind of 6 to 12 months?
Yeah, well, it is quite interesting. I think businesses, we actually have quite a large cohort of businesses in our portfolio that we're sort of creating B2B tools to either augment like staff learning or student learning, or to facilitate connections and relationships. And they had a business case before, but boy, do they have a business case now. So we had, you know, a business that was helping university students to kind of form those early relationships, like the Gen Z. Is it Gen Z now where we're going through uni? Oh my gosh, that makes me feel so old. But like that generation who are so used to digital facilitation of relationships and now almost expecting it before they will kind of go to a face-to-face thing and go up and introduce themselves. That's like an alien concept for them. So, but they actually found that obviously when lockdown kicked in, that the students were using it to literally make friends in halls because they were going in and being locked down. So, you know, this has then led to really interesting conversations with their buyers in the universities, for example, to go, this is the only way your students have to connect now. So sign up for one of our pilots and then we'll get to know kind of your buying behaviors. So anyone who was selling B2B had a bit of a double-edged sword because procurement basically froze, certainly in the first 6 months to 9 months of the lockdown. Lots of furloughing kind of procurement teams, HR teams, training was put on hold in a lot of organizations. So a lot of those guys suffered even though the business case was stronger. So I kind of think, you know, earlier in this presentation, we talked about SaaS businesses or those that are sort of helping organizations with workflow, efficiency, IoT, Industry 4.0 stuff, I think is going to remain incredibly important. And, you know, fintech is huge in this region anyway. And I do see that having a boost as well.
Wonderful. So quite a range of different things there really that we're going to start to see come through, which is again, obviously it's really exciting, and it brings that kind of, you know, the funders in, and once they see success, it does kind of build on each other, which is obviously very, very exciting to see. One of the areas that we're quite passionate about at Elevate, and we're seeing, you know, that being heightened more and more this year in particular, is around that kind of sustainability and green tech. Is that something that you're starting to see more activity in, or is it still seen as it's a nice thing, but it's not necessarily commercial, or are we starting to see a bit more money getting behind that?
Yeah, it's a good, really pertinent question, actually. So on the 11th of March, we're holding a sustainability pitch event. So we've got 5 businesses that are tackling things from, you know, carbon reduction to, you know, energy generation or energy saving, kind of from a B2B or from a consumer driven perspective. And we literally just responded to the British Business Bank survey of the landscape, and they were asking questions about ESG. Is that environmental sustainable goals or economic sustainable development goals and all that kind of stuff. So it's interesting because they were asking, you know, what are the drivers for doing it? And I think certainly in a startup, they're not investing a lot of money into sort of making sure their operations are sustainable. I just think that initially they are driven by a sustainable purpose or an ethical purpose. So it's kind of baked into their articles potentially, though not necessarily. So, you know, I think it is going to be a bigger area of growth. I think a lot of businesses are starting out of people's passion and seeing trends. And certainly we know that a lot of angel investors who previously made their money in oil and gas are pivoting to sustainability now. What was the other point I was going to make then? It'll come back to me. But yeah, oh yeah, that was it. The role of kind of public funding in this area is going to be very interesting because we've obviously got net zero goals. But unless there's ways to kind of really incentivize businesses that would otherwise not consider it, that it's a no-brainer, or indeed to drive consumer behavior, there needs to be kind of public incentive schemes. So there are already kind of minimal things in place for electric vehicles, for instance, or just infrastructure projects, and an increase in maybe kind of local authority-driven tenders for private businesses to bid for. So I do see this as being a trend. We've certainly got a pitch event coming up very soon where we've got some investors who very much, you know, focus on that area or indeed have their own businesses in that area. But I would be interested again to see what the budget has to say around the Green New Deal stuff. And is it Glasgow, the summit's going to be taking place. So all eyes are going to be on the UK to see what it's going to be doing.
There is definitely a huge opportunity there, isn't it? And it's one of those things that, you know, more and more businesses are coming to talk to us about it. And as some of you may be aware, we recently went through our kind of carbon literacy accreditation. Elevate is now the world's first carbon literate business development organisation, which is very exciting. But a lot of that was driven that kind of businesses in every sector who were talking to us were suddenly like, we need to do something. And that funding question has been like the little missing bit there, that it has been either, as you say, people with particular passion behind it, you know, they morally believe it's the right thing to do and have built a business up around it. But it is that government funding, because sometimes whilst long term it is revenue generating, or you know, there'll be cost savings in there, it can be that kind of, you know, outlay of money at the start. And we see it with, you know, the Green Homes grant, that if you have that immediate outlay supported by the government to make changes in your house, you know, long term, yes, you will see a reduction in your energy bills, but we're not necessarily individually in the position to do that. And I think there's a lot of businesses that are in a very similar position, that they genuinely want to do it for all the right reasons. They can see the long term benefit of it, but it's where does that chunk of investment come from?
They're expensive, and it's always that, you know, I'll wait till it's more mass market and the cost comes down, but that relies on early adoption and incentivizing schemes to make it, you know, make things more affordable for consumers or businesses to implement. So yeah, if there are ways to kind of lubricate that process, I think that would be great.
Wonderful. So we will be watching with bated breath to see what comes out of the budget and how that changes things. But great to hear such optimism for where we're going, and to give people that kind of that real honest view of how difficult and how time consuming a lot of that can be. So we're going to come to a close in a moment. I'm just going to give Jess a quick heads up that because I made you host to share your screen, you will be responsible for pressing stop on the record button as well. So, you know, it's all go to rapid promotion here on these. So just wanted to say an absolutely massive thank you to everybody either joining us live or watching it back. Next week, we are going to be hosting a webinar looking at reopening and how we do that safely and bring kind of businesses back into our town and city centres. And we're going to be joined there with RDPR, Bruntwood Works, Downtown in Business, a whole range of different people offering their perspective on that. So hopefully you can join us there. We will also drop some details in as we send this out and into the comments on the YouTube video as to how to get in touch with GC Angels. I know Jess will be delighted to speak to you. So Jess, if you would like to press the button, we can end the session.